Hello, you're watching Btva's Business Nigeria for today, Thursday, December 3rd, and I am 2G Andrews. Tonight, we take a look at the hotel and hospitality sector in Nigeria and how Marriott and Starwood, the Starwood deal will change the Nigerian hotel industry landscape. Joining me to discuss this development is Lanre Oyegbola, Chief Imagination Officer of Boomerang Africa, and Adegboyega Olatide, who we also get to discuss how Nigerian firms have taken advantage of emerging technology trends to drive e-commerce. The head of marketing at JUMIA Nigeria will join that conversation. And in the face of lower rates, how have equity markets fared? We'll be talking with Adegboyega Olatide and Oluwatosi Olasende, who will provide us with coverage on that. When we return, all of those and more over the next 30 minutes. Do stay with us. Welcome back, and we begin with the business news that have made the headlines in Nigeria today with Michael Uchegbu. Michael, do help us with the headline news.
Thank you very much, Judian, for the stories making headlines today. MTN Nigeria's initial fine of $5.2 billion has now been cut by 35% to $3.4 billion. The Nigerian Communication Commission, NCC, reduced the levy in consideration of a request from the company. The Chief Executive Officer of MTN Nigeria quit as part of a management shake-up and has been replaced with Ferdy Moolman. Nigeria's FX reserves dropped to $29.88 billion, and for the first time in 4 months, Nigeria's foreign reserves fell below $30 billion, putting further pressure on the CBN's bid to defend depletion on the Naira and avoid devaluation. That is according to the information from the Apex Bank. President Muhammadu Buhari leaves Abuja for South Africa today as he participates in the Forum on China-Africa Cooperation in Johannesburg with the hopes of asking China's President Xi Jinping to fund rail and power projects urgently needed to diversify the Nigerian economy. Over to you now, Tunji.
Thank you, Michael. Now, in November, Marriott International entered a $12.2 billion deal with Starwood Hotels, a move that positions the combined hotel group as a leading brand in Nigeria and perhaps putting it in front and center in global hospitality business. How exactly do these brands stack up in Nigeria today?
America's leading hospitality group, Marriott International, on November 16th, announced its plans to purchase Starwood Hotels and Resorts worldwide for $12.2 billion. The deal would position the company as the world's largest hotel company. Marriott will pay $72.08 a share in cash and stock for Starwood, while Starwood shareholders would own 37% of the combined company, as well as $7.8 per share from the spin-off of Starwood's timeshare business and subsequent merger with Interval Leisure Group. Now, what exactly does this mean for its presence in Nigeria? Marriott currently owns 5 operational branded hotels in Nigeria, with the Lagos Waterfront Hotel in the pipeline for completion in 2016. The current merger will see a transfer of ownership and management rights of Starwood's 5 operational brands and the 6 in the pipeline. Marriott International is now poised to own and partly manage 15 hotels in Nigeria by 2022, earning an opportunity to position in the more trendy and youthful brands as Starwood is known for. This is undoubtedly the #1 leading international brand in Nigeria hereon, trailed by IHG, Hilton, Accor, and Sheraton.
To get a perspective on this, what this means for the future of hotel and hospitality in Nigeria, I have with me in the studio Btva's head of research, Adegboyega Olatide, and Lanre Oyegbola, Boomerang Africa Chief Imagination Officer. Welcome to the show, guys.
Hello,
I wanted to ask Lanre, though, because I'm curious, from a marketing perspective, when 2 mega brands like this, such as the Starwood and the Marriott brand, when they come together, how do they handle communications in emerging markets like Nigeria? I mean, how do they harmonize that front?
It's a pretty complicated situation. But the truth is, it's usually a function of what strategy are they trying to adopt? What is it that the acquiring brand is driving at? So in this scenario, it would be that what is it exactly is driving the move to acquire such an asset? And so if in a market like Nigeria, where you find that there's a lot that happens within the mid-tier segment of the market, it will be that it allows the mega brand to be able to access the value that is available within the mid-tier segment of the market. And so what that means is that there will be an opportunity to develop a firewall brand.
Well, then looking at, I mean, perception. Perception is very key to this market. A lot of people like the hotels on both sides. Some people are loyalists to hotel on this side. Some people are loyalists to hotels on this side, which is not particularly different sometimes. You know, some people just believe they like the way the beds are made. They like the little V shape at the end of the toilet paper. But I mean, how do they manage that? You know,
it's all about experience. I mean, everything about brand and managing, you know, service brands for that matter, particularly in hospitality, is largely about the experience. Now, the difference between a Marriott and a Starwood is about the experience that they both deliver to the users of their service. Okay. Now, I do not see a situation where they will change name. I do not see a situation where there will be cannibalization, where one brand will give way for the other.
Change,
Exactly. So it's going to be that you still have both networks operating. So you're going to still have all the Marriott hotels the way they are. You're going to have all the Starwood hotels the way they are. Okay, but in the point of business, there is already a consolidation. It means that someone has a bigger share of the total stake in the market with regards to hospitality here, right? And what that does is that it means that they are able to determine a lot as regards to pricing, as regards to, you know, what share of the market they control. And with the era of the dot-coms, you find that there are quite a lot of people who really do not own a single piece of furniture, yet they have quite a lot of inventory with regards to rooms that they sell per annum. And the real owners of these hotels struggle most of the time to even sell a bed.
That's what I wanted to get to going out with. The issue with hotels, because I've been looking at the industry report, and a lot of the time you see that hotel viability, being able to stay afloat, is tied to occupancy rates, right? Now, I mean, how do we see both hotels going forward? I mean, in terms of being viable, profitable going forward?
Hotel viability is actually tied to two things. It's tied to occupancy rates on one side, and it's also tied to room revenues per room. Now, what you would basically see is that for Marriott, the Marriott brand basically has the upper echelon of hotels where you have the Ritz-Carlton, and it also has the lower echelon of hotels also where you have the pro-tier hotels and such. Starwood is basically top tier, top notch, and inspires a lot of brand loyalty. So for Marriott acquiring Starwood, for them, it gives them customers who are extremely brand loyal to the Starwood brand. Now, in terms of occupancy, you would have seen a shrinkage, I believe, this year, based on the fact that you had elections, you had some type of political uncertainty for some period this year. And you should also note that a lot of the revenues are generated by business travel globally. However, that differs in Nigeria. Accounts for about 13%.
Let's also, I mean, going forward, I mean, we're seeing a lot of hotels springing across the country. I mean, it's this hotel in this place, it's that hotel. There are hotels built across the. Is there some sort of information driving this this bullish trend in terms of building hotels, or is it just they perceive that Nigeria will be a big market for hospitality?
Well, I think basically it's not Nigeria alone. It's actually Africa. Africa, regarding hotel rooms, is actually seriously underpopulated regarding hotel rooms, right? So basically, Africa is the new frontier. And what you tend to find is, over time, the number of hotel rooms, for instance, like I can use Angola. Angola, you have very few hotels, and the premiums are charged as much as $500 a room, which abroad is an obscene amount.
Well, I wanted to now ask, concerning, I mean, brand-wise. These guys seem to be stacked. It's now them against the other smaller hotels in Nigeria. Is there a disadvantage for the smaller hotels?
There are two sides of the same of a coin as you look at the situation. It's also some form of a disadvantage to the consumer.
Okay.
If you look at it, not just from even industry. Okay, what it means is that when in any situation when you have a monopolistic sector, there's the tendency for the owners of that kind of a chain to command premium is very high because you have very limited options, therefore. All right. Now, what that means is that the possibilities for alternatives is very low, very limited. Now, what that means will be it's either you survive as a smaller network
or you die
based on some other value proposition that you are able to sell, or you're just naturally going to have. And the challenge is in managing hospitality, particularly hotels, you can't stop your costs from running. If you have just 10% occupancy, you run 100% cost. If you have 100% occupancy, you run 100% cost. So it's a business that is cost intensive, which means that these merger would portend a lot of danger for that sector. Okay, there's been several debates. If you read up a lot of write-ups that have come through saying that it provides like an unfair advantage
for the group,
for these groups, because it's actually the largest hotel network in the world as of now. That's what it means.
So some sort of harmonizing of costs, you know.
So for them as a group, it means that they're able to manage costs better, because in some situations you're going to have to take away a lot of duplication. So let's assume they have things that are duplicated, HR functions, back-end functions, from the group office, all of that becomes harmonized, all right? So they're going to have to find a way to drive down costs for them, so it's an advantage.
So, Boyega, do you think that this is going to create a wave of franchising across Nigeria? Quickly, though.
Not specifically. Most hotels in Nigeria are actually not owner-managed. They are franchised already.
So we're going to see more?
So, yeah, you will likely see more. Will you see mergers across the industry? I doubt that. But you will see more.
Just to, I mean, there's some report that came up like about, I think, a year or 2 years ago, and comparing prices of hotels where Nigeria and Lagos State was rated, for instance, as the most expensive city, one of the most expensive cities to live in the world. Because 2 years ago, 2 years ago, because of the cost
of the hotel
per night. All right. So what that means is that for Nigeria, we're not even likely to see the benefit of these at all. We're likely to be at the short end of the stick.
Wow.
Because what it means is all the major brands in Nigeria belong to this network.
But Lanre,
so a lot of that,
to actually add to his point, what you've actually seen is because more of them are springing up, the average cost of hotels per night has actually dropped from about $500 a room to about $265 to $270 a room in Nigeria now. Now you actually have Angola that is the most expensive room rates per night in Africa.
Thank you, guys. I will still be keeping you on. We'll take a look at the e-commerce space. Black Friday returns with JUMIA's head of communications, Shirley Okereke. Do stay with us. This is Business Nigeria. Welcome back. You're still watching BTVA's Business Nigeria, and I'm 2G Andrews. Now, in the last 3 years, e-commerce and in particular online shopping has gained a lot of traction in Nigeria. Billions of naira is estimated to have been sold in the past weekend at the just concluded Black Friday. Lanre is still here with me, and we here are joined by Shirley Okereke, head of communications at JUMIA, and Olatosi Olaseyinde, senior researcher here at BTVA. Welcome to the show, guys.
Thank you.
So, I mean, I think this is the first thing we all want to know. What were the numbers on Friday? I mean, everybody went crazy shopping. She was part of it. But what were the numbers? What did we see happen in terms of number of sales that came in?
Okay, so first of all, at JUMIA, we were completely overwhelmed by just the response that Nigerian consumers had towards our Black Friday campaign. So just to give you an estimate, we did over 25 times more than orders placed were placed on Friday, that one day alone, than
On
a normal day, exactly. And to compare it to the 2014 Black Friday, it was 9 times more.
Wow, that's
so it gives you,
impressive.
it gives you an idea of how people liked our deals, obviously, and yeah.
Were there
very
any
successful.
downtimes? Because if that kind of traffic does hit your site, there has to be some sort of pushback at some point.
Yeah, there was a bit. So our sales started at midnight. So at midnight,
Yeah,
people went
I did hear about that. People were waiting, okay.
No, they were. And the thing is, like I said, we were overwhelmed. So basically, our IT team, our server was prepared for 5 to 7 times more than 2014. And we got, as I told you, 9 to 10 times more traffic. So there was a little downtime at 12:02 a.m. So 2 minutes after when people started rushing, going on the website, it crashed for
that
a
was
bit.
Tuss's traffic.
That-
I mean,
You brought your friends, right?
Yeah,
It was
we're told that they spent about 1 billion naira to improve infrastructure and also to avoid something like that coming into place.
Absolutely. Quite a bit was spent to try to prepare the servers for, like I said, 5 to 7 times more, and we got 9 times more. So there was a little bit of downtime.
Well, Lanre, though, you observed Black Friday. I mean, what was the trend? You follow branding trends, basically. What stood out for you with Black Friday?
It just shows what is happening today in today's world. It's just an indication of what we should begin to look at Nigeria and indeed Africa. If anybody sits anywhere in the world and describes this part of the world as developing, they probably are not coming to terms with reality. If anybody still looks at this part of the world and sees it as one nation that is in the woods, it's perhaps not coming to terms with reality. If we were to have numbers to compare what happened in Nigeria to perhaps what happened in Europe or in America, you might be amazed that we'll have seen a lot more traffic that happened, in the online space,
I mean, speaking
just
about-
by numbers.
Speaking about traffic, I mean, we spoke to PayPal, and PayPal told us that they estimated to make 500 million naira. So, I mean, if you put that these are new players. It's going to be.
But I still have a problem with e-commerce in Nigeria. Okay, let's start with how have you been able to get people to buy into this whole culture of buying things online? Then on the other hand, can we really call it e-commerce if you have to bring it to the person's door before the person actually shells out the money to pay for it? Then sometimes he's not at the door. He's not telling you, okay, wait for me. I'm 2 streets down and you have to wait for him. Is this still really e-commerce though?
Well, yeah, I absolutely believe it is e-commerce. In a lot of ways, JUMIA in particular has totally replicated the model that you see in the US and in Europe. So for example, a lot of what we do is similar to what Amazon does, except we do try to customize it for the Nigerian consumer. So Nigerians, especially in terms of establishing trust, 3 years is fairly new, right? Yeah. So we do offer things like cash on delivery. We give people the option to you don't have to use your card online because that might be a bit of a risk for people stealing your information, et cetera. You might not feel comfortable with that. So yeah, we do modify it a bit and give them the option of paying when the delivery man reaches their doorstep.
I mean, I would like to say that I think the point is not about if it is e-commerce or not. It's largely about customization. It's going to be largely about customer relevance. Because for every business and for every brand, it's about realizing where you play and how best you are able to achieve value in that market space. Okay, so that probably is what is happening. And just to mention that if they were able to get an insurance sector, okay, that becomes a lot more viable, then the issue of trust and the risk of completing the entire transaction online will be taken off. Because once you know that somebody is actually going to underwrite whatever risk that is available, then people will go the mile. So if I have got a certain amount of money on my card and then is underwritten for any risk and in any eventuality, then the consumer will finish that transaction online and wouldn't mind.
I mean, that's a new
That is
dynamic
what
to
is
it.
missing,
That is
and
quite
that's what needs to be
interesting.
fixed.
All right, talking about new entrants, we have Udala, new. We also have PayPal, just about a year. Are they impacting on your space, or do you think the market is wide enough to take up everybody?
I think basically the market is very wide, first of all, I'll say that. But I think it's just up to who focuses on the customer the most and who basically tries to cater to the customer the most. And currently, I think at JUMIA, we're doing that the best.
Are the people on the street going to agree with that?
Well, I believe they will, because even on this issue of card payments, so even for Black Friday, we saw the average number of people who use cards online was 27 times more than last year for Black Friday. So this just it's a good indicator that a lot of people are trusting JUMIA enough to pay online, put all of their information online.
Help us understand the model, though, to making money, because I see you do a lot of advertising, the radio, television,
Absolutely,
online, and I know that that doesn't come cheap. So
JUMIA is yet to make a profit.
Yeah, so I'm wondering, how do you put
profit.
that side by side with, you know, cost of operating the business, the advertising,
Absolutely.
then also looking at making a profit on the other hand? I mean, how do we put that together?
Well, it's a gradual just progression, right? Because JUMIA is the oldest player, basically, in the e-commerce market in Nigeria. So part of what comes with being the oldest player is that you have to do a lot of customer education.
True.
So the first couple of years, it was just educating the Nigerian consumer on shopping online, on the ability to skip traffic, go on a website, buy household, etc. appliances, and get it delivered. So a lot of money, as you mentioned, was spent on advertising. I agree with that. However, we are making a transition towards profitability and focusing that efforts.
And how soon do you see that happening, though?
It's hard to put an exact month, year time frame on that, but I can say with marketing in particular, we've actually managed to cut those costs. So compared to last year. So although I told you the success we've had with Black Friday, we spent at least 50% less for marketing.
So, I mean, quickly though, Larry, before we go off this, next Black Friday, what are you expecting to see? Bigger, better, more brand?
There's going to be a lot of brand war into that. There's going to be, not just in the e-commerce space, but you're going to have a lot more brands who would actually play themselves, from their own spaces. There's a lot that will continue to change. The dynamics will be a lot more in terms of what will happen in the weeks and the months to come, not even the next Black Friday. So we should expect a lot more players coming in. You know, we are the market. This is Africa, and we stand in the center for everything that is called Africa. And so let's just be expectant that things will radically change, and there'll be radical shifts in terms of adoption.
But we do hope at that time you won't have them come to your house to deliver before you pay. Thank you very much, Shirley, for being with us on the show. Thank you very much, Larry, for staying with us through this. And also thank you, Tosi Olasende, Btva senior researcher. Up next, in the aftermath of the MPC, just concluded MPC, how well have equities fared and what yields can be found in the debt market? Adigbega Olatude. Welcome back as market players continue to analyze the liquidity impact of the recent MPC decisions. Business Nigeria takes a look at how the equity market has reacted and indeed the possible impact on the overall economy heading into the end of the year and early 2016. Joining us again is Oluwatosi Olasende and Adigbega Olatude, both of Btva. Welcome, guys. Let's start with... we're trying to see a correlation between falling rates and rumored extent of deficits as concerns the 2016 budget. There are a lot of people talking about the fact that the government wants to borrow some money to fill the gap. I mean, we've heard the Vice President talk about a 7 to 8 trillion budget, and people are saying a lot of that is going to come from borrowing. So rumors have started to spill around. Possibly that is why the rates are crashing. Do you guys see any correlations, though? Tosi, let's start with you.
I mean, interestingly, some of the opinion that the reduction in the MPR is just, and also even the CRR is just creating opportunity for the government to be able to borrow at cheaper rates. However, we can just look at the tone of the CBN governor during the MPC communique, and they seem to be wanting to channel the reduction that they've made to the real economy. So there are two sides to the story.
Equities, though, we felt that, you know, with a lot of liquidity in the market, people will go into the equity space because, I mean, that everybody that plays around that space seems to know what should happen. But
ideally, there's supposed to be an inverse relationship to fixed income markets and equities markets, where whenever you have a rate decline, obviously, because of the fact that managers will look for return in other markets, you should have seen some of that money go into equity markets. But unfortunately, what you have is a situation where participation is skewed towards foreign portfolio investors. And because of that, whatever happens globally affects you in Nigeria. So you haven't seen that yet.
So see, 3-year low yesterday, day before yesterday. I mean, we're hitting the mark every single day.
Absolutely.
If we dip again, this would be another 3-year low. So it's like
I mean, we're currently on a 3-year low. As of yesterday, we have a year-to-date loss of about 21.3%. Thereabouts.
Yeah.
This is one of the worst performing exchanges in Africa, second to Zimbabwe. So now, people are saying that, yes, there was a cut in the CRR, in the MPR, and subsequent to that, the market picked up. It gained about 0.5%, but it couldn't sustain those gains. And yet again, we're back from 19.95% loss, that is year-to-date loss, when the MPC made the announcement. We're currently sitting down at 21.3% loss.
Point, the market has actually lost about 1.12% since the MPC announcement, whereas you expect that whenever rates are cut, you should normally see the market spike. But, you know, typically, sorry to cut you off, Tosin, but typically what you tend to see, particularly in December, early December, is that the markets are slow. But you tend to always see the markets pick up about a week or 2 weeks before Christmas. And that's largely due to the fact that, first of all, end of the year. Secondly, how portfolios will look towards the end of the year. Secondly, your cash balances. Guys,
help me out with this. I'm trying to understand. Is there consistency with the central bank, the MPC, though? On one hand, two MPC, the MPC before the last one, you cut rates, you cut CRR, injected lots of liquidity into the market. This last MPC, you come and you sort of cut rates again, right? I mean, and you cut CRR, you cut the MPC. And then just right after that, you sell OMO bonds. So you're mopping up liquidity on one hand, releasing it on the other hand. I don't get that. You're trying to create liquidity. At the same time, you're also mopping up again. I mean, how do you tie that in?
The thing is, you're mopping up liquidity at a cheaper price. The OMO, before the recent rate cuts, OMO would have come out at yields
14%.
of exactly ranges in between 11 and 13%. Now I'm almost certain.
Well, the question is, I mean, the money is still yours anyway. You could have kept it away. So why? Because
and you know they had an OMO that was set to happen on Thursday, but actually that did not happen. So they are still yet to do that, the mop up. But still, talking about the market in general, like I think we should also go back to the fundamental issues. Everybody's talking about how the equities market is on a 3-year low. The question is why. So yes, they cut the MPR, but there are other reasons why that we're seeing that kind of activity on that space. I mean, we're talking about the forex exchange, the currency risk, the risk for the foreign investor that wants to invest in the equities market. We're also looking at things that the manufacturers are struggling to get. The forex is taking them almost a 6 weeks time lag to get that. That will eventually hit on their profits. And also the deteriorating earnings of the market. I mean, look at the bank. Look at the results we saw released at Q3. So all of this is also factoring into the equities market. And there's only so much that the MPR or the CRR can do. So we should also go back to the drawing table and look at other ways.
I mean, going back to the economy as a whole, central bank and the government announced some bailout for some states, I think 27 states a few months ago, and we felt that was going to be a curve, turning the curve. But there's been some indications that some of those states, if they don't get more funds in a short period, most of them will go insolvent. I mean, doesn't that kind of scare us? Because largely, to a large extent, most of those workers in those states contribute a large portion of the consumer spending in those states.
Now, the question is, Tunji, for every bailout, what is the money spent on? Now, if you have a scenario where the bailout is spent on recurrent expenditure, where you're using it just to pay salaries, then it's...
That was what it was.
That's what I'm saying. So that's what happened. So you don't expect, when you have a scenario where they give you money and the first thing you need to do is pay a backlog of salaries, then what happens because salaries are recurrent expenditure, so if I haven't paid salaries up to September, mind you, if you pay me in November, I still have some months outstanding, and it continues that way.
Tosi, Budget State of States spoke about the fact that only about 19 of our 36 states were viable in terms of revenue to expenditure. And that is assuming that if the no FAC allocations come in, those states will still be able to meet their obligations and still have something left over. There's about only 19 states met that. The other ones actually could go broke if we don't see FAC allocations. I mean, shouldn't this be a time where we could just all, I mean, the economy is bad already. Could we just hold the brakes and say, everybody sit down, let's fix this now?
I think if you notice, the government is already thinking of an orthodox method. Some might hold a different opinion as to how that is not effective or whatever the case may be. But I think this is the time. This is the time to try something new, try something different. How else can we make money? How else can we mitigate this risk? How else can we, fund this deficit, this shortfall? And everybody needs to go back to the drawing board and look for a solution.
Gwega, I mean, we looked at this together earlier. 19 of those states, some of them in red, right there on the video wall. We can see Kwara, Ondo, Ekiti, Bauchi, Abia, Zamfara, Kaduna, Imo, Gombe. You can see on one side their monthly revenue, on the other side their recurrent expenditure. And you can see that for Kwara, for instance, it still has a deficit of 566
million. Tunji, there's one word I would state at this point, and that's ingenuity. Mind you, something similar happened to Lagos State years back. This was during Obasanjo's time, where they withheld FAC allocations for quite some time. And Lagos State had to come up with ingenious ways of boosting revenues. They had to look inwards. And ultimately, what happened was Lagos State now transitioned from a state whose revenue profile grew from 2 billion to about 23 billion monthly. Now, I'm not saying that everybody's going to have the tax profile of a Lagos state, but you do have certain areas within your state, I'm sure, that should give you some type of competitive advantage.
Let's look at some of the healthy states before, so that we go straight into them. Now, the states that are in the safe zone. Now, we have Edo, Anambra, Cross River, Taraba, Yobe, Sokoto, Kogi, Benue, Jigawa. I mean, you can see, if you look at the monthly revenue, recurrent expenditure, you can see that they're in the green. So they still have something left over. The next slide is going to show you the other states: Kano, Kebbi, Ebonyi, Niger, Enugu, Katsina, Delta, Rivers, and Lagos. Rivers is actually one of the most outstanding performers, and Lagos also. I mean, if we have only 19 states, isn't it time we start thinking about mergers and acquisitions?
Before we even go into mergers and acquisition, the National Bureau of Statistics released the data on the 30th of November. It stated that despite the contracting growth and the macroeconomics headwind, did you know that the consumer spending in Nigeria is actually one of the strongest in such a long time? What are the states doing about that? So it's enough for us to just sit there and say, oh no, there's a drop in crude oil prices. How do we look at all the ways?
But the question is, it states that consumer spending increased. What consumers?
Exactly, yes, build it around them.
Now, the truth is, if you're talking of the private sector and the public sector, I'm almost certain private sector consumption should have increased, could have increased. But public sector consumption, I'm almost certain, would have taken a dip. Because when you have a backlog of salaries that are owed, that obviously affects disposable income. What
constitutes, what is the composition of the public sector?
So that's what I'm saying. It would obviously be state employees, it would be employees from the state, from parastatals also.
Yeah.
Well, I can tell you that we will continue to follow the story of the states because, as at now, it seems to be all up in the air, especially as the federal government is struggling to come to terms with revenue going into 2016. How will this state survive? States like Osun that have had salaries not paid for months, and workers starting to go to the streets to complain. It's not a very good sight, guys. How's the Christmas? How are you preparing for the Christmas, by the way, Tosin?
It's going to be a quiet one, a lot of introspection and the planning for 2016.
Is it because of money or?
No, personal.
You need a bailout. All right, thanks, guys. Thanks, Adegboyega.
Because of Black Friday, actually.
No, that's not true.
Spend too much money on Black Friday.
Adegboyega, I would like to say thank you, Btva's head of research, and Oluwatosi Olasende, Btva's senior researcher. Join us again tomorrow for news shaping Nigeria's business and the Nigerian business environment on Business Nigeria. I am Tunji Andrews. Keep doing business, Nigeria.